Hello, trading world. It is July 25th, 2022, and this is my pre-market outlook and technical analysis for day trading the spot. I thought I would bring to you an analysis for this week to kind of prep you and prepare you for things that are to happen this week. And as the title of the analysis goes, get ready, big volatility coming. I am still on vacation, so I haven't been doing the pre-markets in the morning on a regular basis, but I wanted to try to get this out to you beforehand to prepare you for the week. This past week, we got a lot of forewarning, either in earnings and or guidance from key stocks. And we have the big boys of tech and FOMC still to come. I want to go back because there are two stocks that really stick out with the guidance they gave. As technology has evolved, there is a piece of tech that has become almost entrenched in today's society, and that is the cell phone. When the two giants of the cell phone industry, AT&T and Verizon, post moves like the last 3 days, and the CEO of AT&T spoke about having to eat $2 billion by year end because people are not paying their cell phone bills, this is a grave warning for the market. As you can see, the huge gap down in Verizon. Let me bring up AT&T just to show you what they look like. And this is crazy. This is a huge gap down on a stock that hardly ever moves. This may be the biggest move I have seen in AT&T in a long time. So that's saying something for this stock to jump or fall like that. Pair that with the fact that there's about an 80% probability of the Fed raising rates, and just to bring that up, just to show you I'm not pulling that out of my behind, let me bring up the CME website. All right, here's the CME's website with the probabilities for the rate hike that we're going to hear a lot about all week. As you can see, there is an 80% chance of raising rates 75 to 100 basis points. And then there's a 20% chance of raising even more than that. I actually spoke about this in one of the pre-markets last week. Remember the retail sales number that made the market move, or really that kicked off the rally? I said that this was going to be bad because the Fed was going to take that as the consumer is strong and there's pretty much no need for them to hold back. So that's going to be interesting to see this week, Wednesday, when they actually come out with the announcement for raising rates, how much that actually played into the decision. With that being said, the overall outlook for the market looks very bleak. Now, what I will be looking at and doing this week, you just heard me say that the outlook is bleak for the overall market. However, we are entering into a high-level time frame compression. Remember my analogy of the market being a marathon runner, and we are entering that water break rest area where we kind of run in place for a while we refuel and build energy to go through the next range. Last week I pointed out that the weekly is climbing into its rest area and the monthly has fallen into its rest area. This is the high level consolidation I was speaking of. And because of this, it doesn't mean we are necessarily going straight down from here. It's actually quite the contrary. We are setting up for quite the large squeeze. I will take advantage of this time and breaking volatility by building up a decent number of $5 and $10 wide bull call spreads in the VIX, stretching out past September and hopefully some October expiry as well. Looking at the week ahead, we still have a bullish bias closing above the 395.09 with a possible retrace back around the 392 area. Also, you want to take the time to set up your calendar for all the market moving events coming. Tuesday, you have Case-Shiller, then earnings from Microsoft, Google, Visa, and Coke. Wednesday is the big day with FOMC announcement and earnings from Meta, better known as Facebook. Then Thursday, you have CPI, GDP, jobless claims, then earnings from Amazon and MasterCard. Most of these stocks are mega market cap, but stocks like Visa, MasterCard, and Coke will have a greater insight in their guidance due to their direct relationship with consumers. One more thing about the SPY. Most traders know a little about the Elliott wave pattern. Here we have an example of the Elliott wave pattern. We have a motive wave pattern, which is your main trend, which has 5 waves to it. Then you have a corrective wave pattern, which has 3 wave patterns in it. We are, in my estimation, completing the corrective wave pattern on the SPY right now. And if we can't break past the 418, 420 area, then we start another motive wave pattern, only this time it will be bearish. So we'll have 5 waves on the bearish side. And that will look something like this. And that's going to start from this particular rally that we're in, or this consolidation pattern that we're in this very moment. So that's what the bearish wave pattern or Elliott wave pattern would look like, which also coincides with what I said about the stealth bear market structure we're in, where we're going to have 4 to 5 legs down and not just what we've had so far. And actually, I have a better chart. Let's see if I can bring that up. this actually shows it better right now as far as where we are on the SPY. And if I use this, where we are right now, this was actually the fifth wave pattern on the bullish motive side. And on the corrective side, you have three wave patterns. This would be A, this would be B, and this is the C where we are now. And if we can't make it back up past and break through this 418 to 420 area, it definitely signifies to me that we're continuing into a very bleak, bearish market from here. All right, here we are with the key levels to watch for on Monday. Starting on the resistance side, we have our jack resistance at the 395 to the 396 area. Then we have our queen resistance at the 397 to the 398 area. Then king resistance 399 to the 403 area. On the support side, we have our jack support at 393 to the 392 area. Then our queen support 391 to the 390 area. And then king support 389 to the 386 area. The main thesis for Monday is bullish, closing above the 395.09 with a projected target high of between 395 and 400. Our alternate thesis is bearish, closing below the 395.09 with a projected target low of 393 to 389. The current major channel we are in is 379 all the way back up to the 397 area. And the next major channel above that is going to go from 397 up to 416. Expect high level consolidation, meaning we could see every inch of the range and see it fast. Since I'm doing this today and I've been on somewhat of a vacation, I did not get together the scenarios of the day. I may or may not get them up by the morning, but we'll see how it goes because I am somewhat on vacation. But I wanted to get this out to you to help you prepare. Make sure you have your calendars up, knowing what to watch for and what's going to move the market this week. So, as always, it is very important that you know and understand your risk, because the market is going to push you to those very boundaries and beyond right now. I hope this helps, and I'm going to close this out as always by wishing you a positive trading day. Have a great one.